There was an asymmetric risk coming into this week. The market was so comfortable with the idea that this produced a positive result that the risk was greater to the downside, if you really think about it. Now, are we a little bit more balanced?
I think we actually are. Early in the week, we put out this note discussing Aussie yen risk reversals. It's a measure of the skewness of risk. And they had dropped in the risk-off direction, but they were kind of in the range of where they'd been on kind of moderate sell-offs. Now they're kind of back to where they were when vol was going through the roof in the beginning of 2018 and markets were collapsing. It suggests that, I think what's in the market now is that the U.S. tariffing, that's in the market. The issue is what the Chinese response is. And if it's moderate, it's possible we can get a modest buyback of risk.
Let's just draw a line under that. You think the prospect of tariffs going up this Friday on the U.S. side, that's priced in now?
I think that's priced in after Trump's comments yesterday and the move in the market that we've seen today. At one point, I thought there was a chance that maybe they would do go from 10 to 15 as social restraint. I don't think that's in the market right now. If they did that, I think markets would rally.
This is a very difficult calculation to make. But Michael, do you agree with that?
I think it's increasingly been priced in, but I've been concerned about the bond market. People were optimistic coming into this week, but many central banks were priced to cut interest rates. Even the Fed is priced to cut rates. Australia was priced to cut rates. New Zealand's priced to cut rates. If we're so optimistic about the future, why do central banks have to cut interest rates to keep things going? So I was more balanced in terms of the optimism, which seemed to be prevalent in many perspectives. I wasn't quite sure that was that optimistic.